If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Wednesday. So, little discussion around this current price. Last week, I closed out some of my bull put spreads in the 600s on the SPY for a small loss. I saved some risk on it. I think I saved myself maybe 30 cents a risk, 35 cents a risk. It was a 2 to 3% probability of coming back to this level as of last week's trading. Because you look back a week ago, where were we? We were all the way down here. And this market has screamed to the upside. Now, I did place a trade this morning. If you are interested, which I could post this in the Pulver alerts, it is a bit of a fancy trade. But I am looking at something out 30 days for a little bit of income and a potential profit trap. So it's on the SPX. And I bought the 6290, sold the 6300 call. That creates a bull call spread. And then I sold the 6340 and then bought the 6375 to create a bear call spread. So I have a profit trap up here. It's out of the money. If I show you on the risk graph right now, it is looking like, let's float this back here. Looks like this. So right now this is trading for about $1.30 to $1.40 credit. Now the way this trade works is this is live price. So for about $1.40 credit, if price just stays where it is over the next 30 days, price can go up a little bit, okay? Price can go down a little bit. Price can go down a lot. Price can go nowhere. And you can keep that $1.30 to $1.40 credit. So this entire area here is about $1.40 credit. Now this profit trap is if we're greater than 6,300, we have a $10 profit trap. So this would be 10 plus the $1.40 that you pull in for credit. Let me go back here. So 10 plus the $1.40. Right? So that'd be a max of $11.40 max profit. Now the risk on this trade would be if we're greater than 63.75. 63.75 is where I start taking on some risk. Okay. So I'll post the trade right now, showing $1.40 to $1.60. If you get, I got filled for $1.25, so you might actually get a better fill than me if you want the trade. There is risk in this trade. There's still a risk of about $2,300. There's a profit trap potential of about $1,100 is like the perfect trade. So it's either going to be I make $1.25, okay, I make $1,000, or I can get this perfect trade at $11.25, or worst case is I lose about $23.75. That's worst case. So I have quite a bit of number of ways to do it. I've got about a 90% chance of profit on the trade mechanically right now. The reason I decided to do this trade is, look, we've had a pretty amazing run, but if we don't have a 10% move, okay, we'd have to essentially look at this and say from the January 13th low, this market has gone up 10 freaking percent, right? That is a 9% move to get to my bull trap. And this would be, in order to threaten my position, we'd have to go up 9.8%. I mean, I'm not saying it's impossible, but I'm saying it's unlikely. So that's the trade that I'm taking. All right. Also, if you took the trade with me yesterday in the Pulver alerts for Netflix, Netflix just absolutely destroyed earnings, and we have 2 more days in the trade. Now, I need Netflix to stay above 920, and so I put in a pending order today on Netflix to close it. I'm not taking less than like 490 or 495 on the trade. Right now it's trading for about 475, 480. It was up to $5 earlier. I'm going to go ahead and put in a 4.90 credit today. If it fills today, awesome. I'll take, all but 10 cents of the trade, and we might just require the day to close out. but Netflix was well above expected moves. I calculated out about a 10% move, which past earnings did about 6 out of 10 times. So I had forecasted about an $85 to $86 move. I priced that in with my bull call spread and my bear put spread, and so I'm losing on the bear put spread. So I'm losing on the bear put spread, but I'm winning on the bull call spread, and the net profit should be around. I took this trade for 275, which means my max profit's going to be about 225. So I can lose on one trade and win on the other trade and still walk away with 225 credit per or for the trade itself, which is not bad, right? Trading the earnings play both sides and still walk away with a nice return on capital. Worse, my max risk would be 275. If I was dead wrong, 275 is my max risk, but to make 225 out of 275, I'm making 81.8% return on risk. It's not bad. Now, I obviously need price to, hang in there and just not collapse down to 920. So I'll go ahead and set a chart alarm here. This is by Friday, by the way. So 920 expiration. But I don't want to close this trade out for anything less than, well, I mean, I'll say this. I'm not going to let it turn into a losing trade. I will say that. But I'm going to try to get this trade closed out for like 490 or 495 credit to take as much of the profit as I can. Because right now the probability of us coming down, if I go to the expected move here, there's only about a 10% chance that price would come back down to 920. Okay. So I like the probabilities. I don't want to close it out right now and say like, oh, I'll just take my, 450 or 460. It's like, I'm going to try to get 485 or 490 for the trade and let it close today. If it closes out, I'll update the Pulver alerts. All right. So that's notable on Netflix, way over expected moves. What this does tell me as well is if the market is excited about something, man, they're throwing a bunch of money at it. So if we have like, let's say when we have Mag 7 earnings that are probably coming up in the next week or two, if the market is liking the beat on earnings, so it's EPS or revenue, if it's liking whatever the consensus is, then we could have better than expected moves. So it wouldn't surprise me, but I also think that with this bar count on Netflix, um, I don't know. I don't want to call the top here, but I wouldn't be surprised if we fade this move. The stretch away again, like this is a lot away from the 200 moving average. It's 26% away from it, and it's also bar count wise about 320 bars from the last time we touched it. So anyway, we'll see what happens. We will see what happens. All right. So that is Netflix. Okay. For the week so far, let me go back down to the 5-minute time frame. A lot of gaps in the last week of trading. We've had 8 days of trading and we've had 4 pretty sizable gaps. So this was our CPI gap right there. Shortly after that, we created another gap. Even yesterday's gap didn't get filled. So there's still a gap there. And then another one that gapped up about 0.48 to 0.5%. I'm just thinking as we approach these all-time highs, we could see some resistance at those all-time highs. It's been a nice little recovery, obviously, but only having a 5 to 6% pullback on the S&P, a 7% pullback on the Nasdaq. If that's it, I don't think that's enough. I don't think that's enough to justify full-on buying spree. I think that yes, a rotation out of Mag 7 and elsewhere is helping. The way that price has gotten back to these highs has been pretty inefficiently. So I don't know. I'm just a little skeptical. Am I calling the top? No, but I'm just a little skeptical to think that we have some resistance here. But there's clearly some renewed optimism going on this week, and Trump stepping into the office. Be prepared to hear from him every single day, for better for worse. And we'll see if this market is just like crazy optimistic. But I have my doubts. I think that if we take a look across the board, do our top down, 0.6% on the S&P, we're up over 1% on the Nasdaq. The Dow is, again, fractionally up. It's up about 0.25%. Russell is down. So we have the growth, right? So the top 200 growth on Russell is up 1.4%. That is pretty much matching the Nasdaq, but your IWM is down 0.5%, and your value is down 0.3%. VIX is getting suppressed once again. Let me just go back to SPX here. VIX is down. So VIX is down to 1492. I suppose if the VIX is going to continue to push lower, if VIX pushes lower, then we probably have the market melting up a little bit higher. SVXY still making its way back up. I'm just going to keep an eye on this. If we have any type of like correction, I'm just going to end up buying or putting on some option trades in SVXY. DXY, decent pullback. I'm gonna look at the comparison between the DXY and the 10-year yield. Oil still fading a little bit. Possibly support on oil at the 200 moving average around 74.20. Watch for potential bounce here. So if we can bounce off that 200 and look for a closing candle, there might be a nice little scalp opportunity to get back to these highs. Oil is going to be a really big factor on inflation with energy prices this year. Natural gas, same thing. So, watching these closely. My UNG position is, out in time, not worried about it. I'm trying to see if we get into the 20s. Gold having another, honestly, it's a great week on gold. So far, gold for the last how many weeks? 1, 2, 3, 4 weeks in a row, we've had a nice little surge on gold. So from the lows around 25.95 to current price, we're up around 6% on gold for the year so far. That would be end of December into the first part. Yeah, we're up about 5 or 6% year to date on gold. Not too shabby. I still like gold longer term. I just didn't get the deep enough pullback to buy where I wanted to buy. So I'm just maintaining the core position that I had last year and carrying that into this year. If there's any range trade, I keep mentioning this, coming back to this level here, finding some resistance. If this is a range trade, I'd be happy to establish, more core positions. I'd be happy to establish some out of the money option plays on gold, but I'd still be looking to edge higher. Okay, silver has actually been lagging. If you look at gold versus silver, so gold is up to some recent highs the last four days of trading, the last 4 weeks of trading as well. Silver is not quite there yet. I want to see if silver can get back to 32.25. If you look at gold versus silver, we're seeing this push back up towards these highs. Now, one thing that would be kind of nice to see, just based on this range, this is gold compared to silver, would be that we run into some resistance here and we see this head back lower. I'd like to see silver get the upper hand, at least from this chart, and see if my silver trade can catch up and gold can still maintain bid. But I still like both gold and silver to the upside for 2025. Bitcoin, bit of a pullback after the poke of the highs at 109. Possibly a range trade. Maybe some more accumulation happening in this area. So if this is a nice little bull run through the election, a wave or flat pattern where we can find some equal lows, I wouldn't mind getting some pullbacks into I'll just say 90K. I mean, if we're close to 90K, that's at least like position one to scale back in. If it ends up falling back down into deeper corrective levels, that's okay. I'd still be buying this thing around the 80 to 70K level as well. So a couple of dollar cost average spots, but I'm going to be patient. Look, I have ownership of BITO, ownership of IBIT, ownership of FBTC, ownership of MicroStrategy. If we're going higher, there's plenty of profits that I could roll with. What I'm looking for is if I want to add to any positions or generate some income trades, I've got to be patient on my technical levels. Okay, but that is just me. What else? MicroStrategy down slightly to 380. I still have my covered calls in to 310, and that's out into March. I might consider doing some additional rolls on this one. When I'm within maybe 20 days of expiration, I might look at another roll and keep the same strikes. Maybe go out another 2 to 4 weeks. If I can keep rolling this thing for $2 to $4 at a time is pretty solid. That just keeps adding to my bottom line. Coinbase is up slightly. I did some income trades on Coinbase. Actually, I wrote this one down yesterday. Let me see here. Lots of notes on the old scribble pad. Trades this week: Netflix, Apple, Google, Microsoft, Tesla, Costco. Let's take a look. I'm gonna look at Apple. Okay, so Apple, IV rank, we're down to the 200 moving average. Now, I think this is a spot that I could probably put on a trade for Apple, similar to what I did here. Okay, I don't mind taking some ownership of this trade, but that would be Apple having to drop all the way back down to $200. Okay, is it possible? Sure. Apple could drop, 24%. I take on some shares. what I'm going to look at right now is the IV rank has to be high enough that I could probably put in an income trade. And let's go out. I don't mind this like 58 day. This is March 21st, which is a similar expiration to this one. All right. So I'm going to look at the same expiration, but I think I could do a ratio spread and go further down than the 210 by 205. Okay. Question comes in: if inflation sees another high, how does it move the market? I mean, inflation. Look, gold is going to be a hedge regardless. If you see like dollar debasing, loss of purchasing power, you see geopolitical tension. Um, look, gold is a pretty solid play regardless. Bitcoin is that like new anti-dollar trade. It's it's speculation and it's risk on. I think that's the one thing that most people aren't looking at with Bitcoin is they just think it's this, digital asset that exists and it's its own island and it's going to be better than everything else that exists. I don't think that's a play. I think that Bitcoin is still risk capital. You need to have some risk appetite. You need to have some optimism and animal spirits, and then Bitcoin is fine. But the amount of like inflows and outflows, when we go into negative times, when the market starts to dip and pull back, you really don't see Bitcoin up. So I think gold is still a good play. I like silver because technically I can still measure new moves to the upside. I think both those plays are pretty solid. Central banks are bidding like crazy to stay into gold and accumulating more. I would rather be in gold spot price than I would be in miners. I don't care about miners. I think their balance sheet and the growth you'd get on their stock price and appreciation would be minimal compared to just the spot price of gold. But I mean, we'll see what happens with inflation. The PCE numbers coming out at the end of the month. So we have the Fed on the 29th, and that's a Wednesday, and then Friday we have PCE for the US. And all of it is pointing higher, right? Same thing with PPI and CPI, and the last 3 months of inflation prints, we've seen higher levels. The market got all excited last week because it's like, oh, it was less than expected, right? But it's greater than previous. So we're still seeing higher inflation readings. And I think in the near term, it's still going to stay that way. So anyway, let me look at a trade here. So March 21st is out 58 days. I kind of like that window. Let me see. I should be able to go lower. If I did a ratio spread around the 190 by 185, see what this looks like. 57 cents. Okay, so I can move this strike down. This is a what? A 210 by 205. And I can move this now to about an 88% chance of profit, about a 9 to 10% chance of assignment. I think I'm going to take this ratio spread for $200. So I'm actually I flipped this around. My bad. That's an out of the money. That's not bad actually. I mean, just a credit spread for crying out loud. So if I sell the 195, buy the 190, I get $2 for the trade. That's pretty solid. Let me see what this looks like if I flip this around. If I buy the 195, sell the 190, and do that times 2. So I make less credit on I make less credit on a ratio spread than I would on just an out of the money credit spread. Is that right? No. Okay, never mind. Never mind. Wow, the ratio spread is really terrible. So if I buy the 195, sell the 190 times 2, 72 cents credit. Maybe that trade. A 111 for 44 cents to take on 200 shares. Nope. How is Apple's premium not better than 45 cents on like a naked call? That's crazy, or a naked put. That is garbage. How about I don't want to do a broken wing butterfly because I was thinking a broken wing butterfly if I could get premium for it, but I want to have a profit trap. There's just no plan B on that trade. There'd be risk on the trade. Let me see if I did a butterfly long put. Where would I pin this thing? I could pin this thing around the 190. I don't know. So if I go 10 by 20, still not good. 94% chance of profit. Profit trap, but only making like 40 bucks. Gosh darn it, man. Well, I guess I got it at the right time. I don't know. I'm surprised like the IV has increased. Is this a spot to buy Apple? That is the, let's say that's the $3.3 trillion question. Well, if I did a ratio spread, I want the assignment. I mean, it's like if I do a ratio spread, I've got to be willing to have an assignment price. And from there, the plan B is I just repair it. If I do a ratio spread, so if I do a ratio spread, so plan A, okay, so plan A, I feel like Buzz in New York, Home Alone. I'm like A, 2, C. Plan A would be credit on a ratio spread. Plan B would be assignment and repair the trade for profit. That's it. So I have a backup plan. I've got the capital. I'd be willing to own the shares, and I just repair it for a $5 or $10 net profit. Try to make 500 to 1,000 bucks. So I like to look at those as like if I can flip it for half of 1% to 1% for the portfolio, I can do that, whatever, 10, 15, 20 times a year and do okay. Right. But in order to get that assignment repair, I also have to make sure that I'm, protecting the downside and still watching the income levels closely. All right. So unfortunately, I'm not getting the implied volatility is high. I mean, the Ivy rank in Apple is decent, but I'm not thoroughly impressed with the dollar amount. So if I did another 200 by 195, do I get more money? I get less money on this ratio spread than I did when I already took the trade before, which is crazy to me. So I suppose what I should do is look at another expiration. How about I just do that? Let's go at another expiration to April. Maybe it's a little bit better now. If I did a 10 delta, so I can buy the 185, sell the 180, move these strikes up. Okay, this one's a little bit better. That's way different. So if gosh darn it, I got it backwards again. I swear I did that right. If I buy the 190, sell the 185, there. All right, so that's one way to do it. I could buy the 195, sell the 190 2 times. So that'd give me a 125 credit with a profit trap. Ratio spread, if price is somehow not below, this is a 11 delta. So I get 97 cents on this trade with about a 95% chance of profit. I get $1.26 on this trade with a 93% chance of profit. Max loss, I'm going to take on the assignment if I do this trade for April. If I'm getting like somewhat, I'm not going to say aggressive, but if I'm getting somewhat optimistic for this part of trading in 2025, I would say my optimism would maybe go into March or May of this year. The first half of the year, I'd say, okay, if the market shrugs off a lot of bad stuff and it's just kind of floating on optimism and momentum from last year, great. I still wonder like Q4 earnings could print in Q1 and still show some optimism. There could be whatever. We could just have more optimism now that, okay, Trump is president. Everyone's stoked that he's president. Businesses are optimistic, probably to a fault. And the realities of the Trump administration, we don't know. We don't know if it's 25% tariffs in Mexico and Canada are good or bad. It's going to be inflationary. It's probably going to be global friction. Can't be that awesome, right? Now, I don't know how this all plays out, and it could be a lot of talk versus all bark, no bite type thing. So who knows? But for this particular trade, would I mind having Apple on sale with an ownership price of 185? So if I took on shares 190 minus 5 minus 125, I'd own shares at 183.75. Okay, 183.75 on Apple. Let me see if that's worth it. So 183.75 be around a 30% discount. I mean, cash flow wise, I think Apple will be okay. That pulls me back into these previous resistance levels. I don't mind the trade. If there's any, I mean, if there's a pattern here where Apple is taking out lows, getting below the 200 moving average, if there's any dead cat bounce, that still should give me a profit on the ratio spread. If I take on shares, coming back into 2023, 2024 lows, 2022 was a little bit worse for wear. So point is, do I want to, own a ton of Apple? No, I would say 1 to 200 shares at most, and I'd be looking to repair it. Like I said, for half to 1% repair is fine. So if I go out to April, 190, 195, get a $1.20 to a $1.25, not a bad trade. I'm going to take this trade for my portfolio margin accounts. Yeah, let's do that. Portfolio margin. Okay. So 124. See if I can get filled for 124. $124 not filling. Let's try 123. I will accept no less than 120. I mean, 121 is the freaking bid price, man. Come on. 121 got filled. All right. So that trades in. Filled at 121 and filled at 121. Come on. $121 pending. I'm below the mid price. Let's go. 120. Fine. 120. All right. So 121 is the fill on two of my accounts, 120 on another. So I'm going to track the 120. So Apple ratio spread. So a 417 expiration. Buy the 195 put, sell the 190 put, $1.20 credit, willing to own, break even on ownership. If I take the assignment, would be 190 minus 5 minus $1.21. So it'd be $1.79, I believe. Yep, 183.71, or sorry, 79. All right, I'll get that added into my Pulver alerts. That's going into stock options trades. New trade, Apple. So a 417 expiration. Buy the 195 and sell the 190 put. $120 credit. Willing to own Apple shares to repair for profit. I'm going to try to get, $5 to $10 net profit or better. On this trade all by itself, it's a 93% chance of profit. And with the 190 put at a 11 delta, I've got about a 10 to 11% chance of assignment. If assigned, Apple price needs to be less than 190 by expiration. The break even on ownership is 183.79. Is that right? 183.79. That is correct. Okay. Good there. All right, that's it. Apple, I'll add this in, 417. Here it is on the chart. 417 expiration. Buy the 195, sell the 190, $1.20 credit. So screenshot in, and there we go. Okay, closed out some profit this morning. This is a service that I run. 44 out of 48 have been winners the last couple of months. Looking solid there. I do want to close out a couple more of these trades. So the last one I did was a QQQ and the SPY. So I closed out one. Some of these got filled already. Let me double check. SPY, I've got a 599. It's this one here. So 597, 596. That one's got to be really close for profit. Let me double check that one. This one is only 1 cent off the 99 by 98. I'm going to close this one down for a, hopefully a winner here. Come on, dude. Okay, so that 599 by 598 closing out 599 by 98. Okay. And then the 97 by 96. These are all out of the money, out of the money. These should all be good. Okay, so this one I'm going to close. This one be just like full profit or close to it. 20 cents. Yep, I'll close this one down for 20 cents. 21, 22 cents. 21. All right, that was a 597 by 596. So 28-cent debit there, and then 20 to 21 cents on the 597 by 596. So taking two little winners there. And to the Qs, 515 by 520 closed, the 520 by 525 taking profit in this one. 362. Let's try that one. 362 here. 361 right below that mid price. Hopefully, actually 363 is the mid. 362. 361. All right, just doing some maintenance here, grabbing a couple of bucks. $360. Okay, what else on the Qs? The 515 by 520 close for profit. 520 by 525 close for profit. The 510 by 515 close for profit. The other ones are fine as is. Okay, those are fine. All right, so I need to go through and close out some of these trades. So let's go to the SPY. The 599 by 598. Close for 26 cents. Very good. What else? The 97.96 right there. Oops. Son of a biscuit. 97.96 closing for hopefully 20 cents or 21 cents. 20 cents. 21 should fill. Perfect. Okay, that should take care of all my SPY trades there. So this is going to be some just account stuff on my end. One winner, two winners. Rest are condors above and below. The QQQ trades, 515, 520 closed, 520 and 525 closing now. This one hopefully will close for 360. Come on. Closed out there. And that should be it. 515, 520 closed, 520, 525 closed, 510, 515 closed. That's 3 winners on the Qs. Very good. So the 515 by 520, the 510 by 515 closed, and the 520 by 525 closed. So that is 5 winners closed out right now. I've got to do this on all my accounts. So I'm going to get these knocked out really quickly. I just need a couple minutes to update. Closed out there. Close, close, and close on Qs. Easy peasy. The 97.96 right here, closing out for 20 to 21 cents. Ooh, 20 cents. Give me that mid price. Nope. 21 cents should be filled. Come on, mid price. Profit. Okay, close out there. The rest should be okay. This one, 26 cents. 27. Close to 26. Okay, good. So that is 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yep. All right, good. Okay, a couple more. Just let me get through this, and we'll keep going top down, try to find some trades. I put in the Apple ratio spread. It's posted in Pulver alerts. Netflix is looking good for full profit for tomorrow or for Friday. I'm trying to close it out right now at 495 or 490 if I want to take the trade early instead of waiting for a $5 close on end of day Friday. So this trade can close out for 21 cents. There we go. And the 98.99, close this one out for 26. Come on now. Profit there. Okay, helps clean up some of this activity, which is nice. Let's go Qs now. Closed out there, 520, 525. This one, try to get out of here for 360. Come on. Mid price 359. Let's go. 57 filled. All right, 510, 515, done. 515, 520, done. 520, 525, done. Good. All right, 1, 2, 3. Got a little bit more work to do, but let's get it over. Let's get it over with. 359. This is the fun part about individual accounts, is going in and making sure that everybody's getting the trade open and everybody's getting the trade closed. So it just takes a minute, but want to book these profits. That's 3 trades on the Qs, 1, 2, and 3. Good. Now to the SPY, the 96.97. That one should be good for 21 cents. Don't you get sneaky on me with that extra penny. 21 filled, no problem. Good. And this one closing at 26, hopefully. Filled. All right. Home stretch. Okay. And this one here. Good. And then Qs. See what we get out here for 359. Filled 358. Okie dokie. Filled. That's 3 trades on the Qs. Good. Now SPY. This one can close out for 21. I mean, come on. Closing at the freaking ask price. Awful. And this last one here. Closed. All right. Okay, 2 more counts and we'll move on, but want to get these trades tightened up. Closing there. And this one. Good. Now Qs. 520. Closing. And that's 1, 2, 3 closers. Good. So that SPYs and Qs there. Very nice. Last one. Closed. 1, 2, 3 on the Qs. SPY. Let's go 27 here. Filled. And this one for profit. 21. Okay, that should be all accounts. So 597, 596 closed for profit. The 599, 598 closed for profit. The Qs had 3 trades closed for profit. So that's 5 winners. And my little screenshot here, this should be 45 for 49. So I can just delete that. Let's go 45 for 49. Not too shabby. Don't mind a win streak. Okay, let's go find some trades. Okay, that made life pretty easy. That 97.96, close that one out for 21. So that is 12.67. Nice. All right, now we're cooking with gas. Tracker's getting a big fat update. There we go. Cool. All right. We're good. Let's keep going. Apple. Place a trade for April. It's in Pulver Alerts. Amazon, new highs. Ooh, let me look at Amazon here. So I'm going to log into Thinkorswim. I've got a covered call up to 220 out to March. I'm going to look at a quick roll. And see if I can just roll out a collar trade. Oh, man. There we go. Okay. Let's go Thinkorswim Web. Okay, so sitting on Amazon. So I have shares put covered. Um, let's see. I think I could just close out the put and eat this and then look to roll this covered call if possible. Let's see if I can roll this position. So can I roll this? Do we have any other expirations between March and April? It doesn't look like we do. So that's frustrating. But if I roll it, keep it the same strike, 230. So I could get some premium for this for another couple of bucks, which I'm okay with. I'm certainly not going to roll it for a debit. That's silly. So I should get another $2 out of this roll. If I roll it up and strike, it's going to ask me to pay for it. So to go up $5 in profit, I'm going to have to pay $1, probably $1, maybe $1.40 for that, maybe $1.20. So I'm better off if I just roll it out and try to get another $2 out of this. So can I roll this for like a 210? Let's find out. So if I roll this for 210, and I probably want to trade something inexpensive put wise, I'm going to get 210 for this roll. So that'd be another $417 of credit. Let's see. Still working. So mark is 210. That's what I'm trying to get filled at. 207. Let me edit this trade. Let's try to get 205. All right, filled the 205. So I just did a roll on Amazon. I didn't roll it up in price. I just roll it out in time, and then I will play around with another long put. I'm going to see what April and change looks like for a cheap in the money or cheap out of the money. So option chain. Let's go to March, April. Let's go to April. Let's buy something pretty cheap. I'm just going to put like an outlier one. So 125 is going to cost me. I'm going to sacrifice $100 on this. I'm going to go 125. See if I can get filled here for 10 cents. It's going to send me back $100, but it's hedged for an out of the money put. Filled. All right. So Amazon's protected now. That's good. Position wise, pretty simple portfolio. Amazon want to cover. Got some Bitcoin exposure. Got some uranium. Got some aluminum. Have some China. Have some Amazon. That's about it. All right. Want to handle that one really quickly. Do I like Amazon to do anything on it right now? No. I'm managing the shares that I have. We have still had a pretty good stretch away move. So from our current price down to this 200 moving average, that's a pretty decent stretch. We've had, it's not a high bar count, so I'm not, necessarily like calling the top. But Amazon is performing pretty darn well compared to others, right? I mean, Apple is down quite a bit. Apple's down about 15%. Amazon's up to fresh highs. Google is still lingering around these fresh highs. I'm staggered out here with Google trades. This one closed out for profit. Those are still running to 2025. Got some ratio spreads and income trades on Google. I'm totally fine with this one for right now. Meta is lingering around all-time highs. This one has a crazy high bar count. I'm going to wait for a dip. If we get a dip on Meta, I'll probably put in some income trades. If it goes higher, I'm not going to chase it outside of the dollar cost average positions that I already have. But I think we're going to find this 200 moving average somewhat soon. Microsoft is still, I mean, it's behaving nicely, and I've got January. This one is done, so that was profit. Now I have February and March. Because we just ripped to the upside off of this V, kind of V bottom off the 200 moving average, I'm not going to place another trade. I like taking these trades when the market is dropping like this. I put in these trades. So if Microsoft comes back down, then I'll probably put in a trade for April expiration. That'll be a 421, and maybe a May, and just see if it holds that support level. So I'll wait on that one. Netflix, went all the way up to $1,000. I need to stay above 920. I'm going to see if I can close it out. I'll see where it's at by the end of the day. If I can close out Netflix for, I don't know, 480, 485 would be acceptable. I'm trying to make at least $200 per contract. That's the plan. Nvidia up to 145. I might actually be able to squeeze a roll out of this. Let me find out. Take a look here on Nvidia. So Nvidia has some shares, got a collar. There's my share price. There is I'm looking to see where my March 21st, 140 by 130. Okay. Oops. So this is a collar trade. I own the shares at I'm trying to think of my break even. Let me find out. It's like 134, something like that. Nvidia. I own the shares. That one's fine. Ratio spread was profitable. That one's fine. Okay, so I own the shares at 132.14. 132.14. So can I roll this? I want to see the expiration. March 8. Gosh darn, man. I don't have anything in between March and April. All right, well, I'm gonna roll it anyway. If I get a couple bucks for it, I'm gonna roll it. So let me see if I can do a roll on this. So if I roll it out for another 30 days, I get 65 cents more. That's really not worth the roll, in my opinion. I get it called away for $7.86 a share right now. If I roll it out for another 30 days, I'm only getting 65 cents on that. If I roll this down and up, this one wouldn't be awful. If I roll down the put to 125, I could get $2 on the trade. That actually is okay. So I can roll it out farther, keep the strike price at 140, roll the put down to 125. I know it takes a little bit off the protection side, but if I roll the strike out or down to 125, that gives me a $2 credit, which brings my cost basis down to 130, and then I get it called away for roughly $1,000. So I'm okay doing that. And then on the put side, I'll just track the debit price and still have that protection out to April. Okay, so I think I'm going to do this here. Let's go. Let's see what it looks like if I go out one more expiration. That's not that much. That's not better. If I roll it out to May, I get $1.27 for the same exact collar trade. I don't love that. I'll take this one to April. I'm just going to go like bit by bit. So that's adding another just under 30 days to the expiration that I currently have. I'll roll this strike down to 125. Now I get over $2 on the fill. So let's try to get this thing for hopefully $2 or better. I'm going to try 205. Filled at 206. All right, that was pretty straightforward. And I think I have shares of NVIDIA on 3 of my accounts. 1, 2, 3, 4, 5 accounts. Okay, well, let's try all those accounts then. There's my shares. There's my 130 by 140. And look for a roll. Roll this down, go out to April. I'm going to get 206. I'm going to go with 205. Fill there. NVIDIA 130, 140. Roll. Let's try to get 210 on this. Why not? Nope. Let's try 207 fill. 206. Fill the 206. This account, no shares of NVIDIA. This account has shares. There's my 140, 130. Roll down 207. Nice. Okay. And 140, 130. Roll this out. 207. Filled. NVIDIA, no exposure on this one. And this should be the last account for that trade. There's my. Okay, so let's check here on NVIDIA. 1, 2, 3, 4, 5 rolls. And of ownership, I have 1, 2, 3, 4, 5 accounts with shares. Okay, so I successfully rolled all the accounts that have ownership. I rolled out all of those trades. 206 is my minimum, and 207 is my top. So it's a decent roll. I'm going to add this and update my tracker here. That's the fun part. So update, roll out to April 17 expiration. 140 sell call and a 125 buy put, and that buy put debit would be a 420. And I did that for 206 credit. So new break even is just under or just over 130. So 132.14 minus 2.06, 130.08. Okay, so 130.08, if I get it called away at 140, I make 992 on the shares that I have, times 5. Nope. So what is that? 130.08 times there. So I'll make 49.60. All right, that's NVIDIA. Let's keep going. Tesla 422. I'm going to wait for Tesla. Lee, do you have the link for it? It's in my Discord. I've got the $27 starter course for the quick options, and I've got the full practical options. Also, if you purchase the Pulver alerts through A1 Trading, or you purchase any of my lifetime services with Daily Profit Play or Waterfall Income or Double Up alerts, if you purchase lifetime there, you can get the practical options course included. Just food for thought. All right, on Tesla. Look, I like Tesla. I have some shares. I'm going to buy some more shares. I'm still looking for income trades as well. This is a February-March income trade. It's basically, this is a 1-1-1. This is a ratio spread. That is okay. I think Tesla could still find its way up into these highs, but I wouldn't be surprised if we face some resistance. So what I'm going to look for is something like this. If we go high, low, lower high, lower low, I'm going to start adding additional income trades out of the money. I'll also dollar cost average into Tesla a little bit more. I'm pretty keen on this like 300 to like 275 area to buy some more shares. Okay, Maddie, that's awesome. Thanks, I appreciate that. Berkshire Hathaway 457. What, dude? Look at this nonsense. What is happening with this? Berkshire Hathaway's pilot unit to close international oil trading business. Lags industry in 6 months. Okay, well, what's Oxy doing? Son of a biscuit. Well, I got a 50 by 40 on OXY. If it stays above 50, I still make some bucks. If it stays below it, then I play around with it more. So I can make $1.37 per contract. I got 500 shares of OXY. The idea was just to repair it. If I end up, keeping the collar alive and well, and it doesn't get called away above $50, so be it. If it does get called away above $50, that's fine. So anyway, keep an eye on that one. I was just looking at Berkshire. That's crazy. That's a big move. And I don't know if that's an overreaction, but I would say on Berkshire, like, how ugly does this one get? I don't know. We do have a decent bar count. This is pretty similar to the S&P 500. Since October 2023, we've had a stretch move about 300 bars. Go back to the S&P, you're probably sitting at like 320 right now, and we're obviously quite a bit further ahead. 305 bars or something like that. So that seems to be a sensitive reaction to a stock that essentially has traded like the S&P. So I think what I will do on this one is not throw in another trade, but rather see how this one plays out. If I were to take any assignment or ownership, I will watch. There's still room for this trade. I mean, I'm not threatening on this position unless we drop all the way down here to 410. We'd have to do some real damage for Berkshire Hathaway to, number one, be about, what is that, 16+% off the all-time highs. And from current price, we'd have to drop another, 10 to 11% in the next like 60 days. So we'll see. Let me check the IV rank really quickly. So Berkshire B, IV's at 21.7. Yeah, it's not really high enough for me to say I want to take another trade. When I took this trade originally, we were already sitting around the 200 moving average. That's why I put on the ratio spread. So I'm going to hold off on this one. I will set a chart alarm, though, at the 200 moving average. So 200 moving average. And if that gets hit, I'll look at the IV rank and see if it's worth maybe putting on another trade. Okay, let's take a look at bonds and yields. Okay, 10-year yield is up a little bit. So bonds, a little softer today, a little softer today, a little softer today. 1 to 3, 7 to 10, 20 plus. 10-year yield is sticky around 4.6. I don't know what's going to be. Look, I don't know what this is going to do, right? I mean, if this is a little bit of a inflation pop where inflation shows like, oh, everyone's optimistic and the market rips and the 10-year drops, I just don't know if there's going to be more direction to the downside, or if this is like, okay, nice try, there's a little relief, and then we're going right back up to the highs again. We will probably know more by the end of the month, because when PCE and core PCE comes in on the 31st, it's literally the end of the month. We're going to find out whether or not we're creeping up to that 5%. This is another thing too. I don't think the market can have a ton more upside if we are creeping up into 5% on the 10-year yield. Like that to me would be another kind of broken market, or on the verge of, the yields might lead and the equities might lag, but eventually they will catch up, and we probably won't have too much upside on the equities market if we're stretching out towards 5%. Now, that being said, if we do drop a little bit lower in the 10-year yield, then I could see that there's some more ammunition to justify equities going higher. But this is still like very sticky inflation for right now, as we've seen for the last couple of months. What else here? By the way, I have one trade in my portfolio that is bond exposure, and that's TLT. That is it. Everything else, as far as bond exposure, I'd rather own gold. I'd rather own silver. I'd rather diversify with Bitcoin, for crying out loud. I don't want to have bonds in my portfolio. TLT is fine. I'm trading a diagonal spread to 2027. I'm trying to give myself a big fat window to be right. And hopefully I will be. But it's something where, if it generates a couple grand and I make like 1% on the portfolio, like per account, that's fine. But I'm not looking for like a big bond exposure. If I were to diversify, I actually talked about this. I may be offering a course on this sooner than later, but I'm looking at a diversification of about 50% equities, and that'd be a split between S&P and Nasdaq. And I wouldn't mind going equal. If you want some equities exposure, I wouldn't mind going like 25% S&P, 25% Nasdaq, and then looking at like a 20% gold and silver, or actually a 25% gold and silver, and 25% Bitcoin. If that's too health or too high, then you can go 50 equities, and maybe a 20% gold and a 20% silver and a 10% Bitcoin. So I've got some fresh accounts that I'm looking to open up, and this would be a really easy way to have, core positions with options around them. Obviously, if I get called away for profit, that's good. Build the bottom line up by maybe 1 to 2% a month, and continue to have defense and collars, and see if you can generate a 15 to 20% year on a lot of the retirement accounts that I'm looking at. Like, this is a pretty simple mix. And obviously Bitcoin is going to be volatile, for better for worse, but having protection would certainly help. I would almost rather say, like, I don't know. I mean, even if you had 10% exposure on Bitcoin, if Bitcoin rips, the whole portfolio is going to benefit. If Bitcoin is higher, I think that's still risk appetite. You're going to see equities probably drifting higher. Gold, silver be your bigger diversifier plays. Gold, historically, if you go back 70 years, instead of putting bonds in your portfolio, if you put gold in your portfolio, it's performed the same, if not better. So the whole idea of like the 60-40 portfolio, it's pretty trashy. I don't want bonds in my portfolio. Now, I don't mean to insult any bond trader out there that's just like, it's what I do. Bond yields are totally different than trading bonds. But anyway, I'm not sure. But I like that mix because it's pretty simple. It's easy to manage. It's easy to also have, like, upside callaways and downside protection. Futures market, corn's been making a nice little run. I've talked about this the last couple months. I'd like to see if I could trade corn futures, which I can on Tasty. Any type of pullback in here, I might look to get long on corn. I wanted to see if it would pull back into these 2020 and 2021 lows, but it did not. So now it looks like, okay, we broke this structure. We're now in a buy zone above the 200 moving average. I can't just buy the breakout. It's too high. I'd get positioned on option trades. So maybe looking at some type of crown pattern like that. And so a pullback to let's say 425, maybe looking for some follow through. Okay. It's not the dislike is mostly the potential risk. Let's say that the US market breaks bonds, right? Let's say that nobody wants US bonds anymore. Let's say that the fact that we print money into oblivion weakens the dollar, and it's just like, you can't just keep kitchen sinking monetary policy and expecting it to be like everyone wants your debt. Um, so I'm just saying, at one point, like, what if the bond market breaks? What if there's so much stress in the bond market that it freaking breaks something? It's going to break equities just as much as it would break the bond market. But I don't know. I think, look, if I was going to own debt, I'd rather own a corporate bond for Apple that is sitting on actual cash, as opposed to the government that's like, yeah, own our bonds. We're good for it. That's essentially what the U.S. government says. Backed by the faith of the U.S. government, we're good for it. Okay, well, what if they're not? And that's like a worst case scenario, but um, I'd rather not have to worry about the exposure. And I could say the same thing about Bitcoin. I could say, like, yeah, Bitcoin go to zero. Maybe it could, but that would not be a crazy allocation. A 40% allocation of bonds, and the bond market breaks, and we've been in a 4-year drawdown of bonds. That is exactly the reason I want zero exposure. I mean, the bond market's been trash when the equities market has been absolutely crushing it. So, um, that we're at one of the highest correlations in history, where bonds to stocks are correlated like 0.73, which is really, really high. And it's going to break. Like, that correlation will not get higher. It should be getting lower. And then you wonder, like, which one gives back gains. If equities keeps improving but bonds keep getting worse, then the correlation is more opposite. But anyway, I'm just going to minimize the bond exposure. That's all. I'll trade options on it. I'll pick some trades here and there, but I'm certainly not doing a 60-40. I don't want that much exposure in bonds. Soybeans, anything off the lows a little bit. Wheat, if we can settle back in here. Cocoa, still curious and watching. This one is diversified ETF. I don't mind this play. I'd like to see if we get back to 2250 before I get long. DBC, still kind of building some structure. This would be a great little falling wedge. If this keeps building and accumulating, I'd really like to look at a time breakout. And maybe that's not, for another 12 to 24 months, but on this trade alone, like, man, that'd be an excellent trade. Probably doesn't look good for inflation, though, if I'm right on that trade. If I'm looking at these diversified commodity-based ETFs, this is not looking for inflation if these things are going higher. Jobless claims, initial claims, China down, JD at 39. I might get this one called away once my expiration on JD. I also have some shares. Let me take a quick peek here. So JD exposure. So I've got 3 accounts, 500 shares each, covered at 39, protected. Oh, shoot, this is next Friday. Let me take a look at a quick roll. Because I have 500 shares, if I roll it and I can get, 40 cents, 50 cents, that adds up a little bit. That's worth it. So if I do a 39 by 30 roll, I go out an extra week, keep the exact same strikes, I get 1 cent. Well, obviously that's not worth it. If I go out to the monthly expiration, Feb 21, we have earnings on March 5th. Okay. I might actually do this if I can roll this out into March. This might not be a bad play. So I've got all the way to March 5th expiration if I wanted to get some more time in the trade. Okay, let's go out to the 28th. So I could keep the 39 and I could keep the 30. That'd be my collar. I get it called away, grab another 92 cents at 500 contracts, or I'm sorry, 500 shares. So 0.92. I make another $460 on 3 accounts. I make another $13.80 bottom line, and I'm going out an extra 30 days. That's not a bad play. Also, that's pre-earnings. So if there's still some optimism in China, that's okay. If I increased it up to $40, now I get 45 cents on top of an extra $1 of profit. So I get another $1.45. So $1.45 times 500 times 3. So another $2,100. I'm going to go for I'm just going to keep the collar the same. So 39 by 30 out to Feb 28th, right before earnings. Oops. Yep. Because then I have to go out to March and I've got to take in earnings, whether it's good or bad. And earnings could be fine. They could be fine. And if I like the stock enough, then maybe I can just establish another position. So I'm going to roll JD. Where right now we've had a nice surge to the upside. If I keep it there, right now I've got a January 31st. I could get it called away right now with a break even of 36.82. But if I go out another 30 days, I roll this out to February 28th, keep the collar the same, and I would lower my cost basis down to like $35.90. Still get it called away at 39. I'll just make the extra like 90 to 92 cents per contract, which is not bad. Not bad at all. Okay, so I'm going to do that. Let's do this. 39 by 30 collar. Let's go back to Feb 28th. So let me see if I get 90 cents for this. 90 cents. Filled at 90 cents. Nice. That's not bad. Okay, no exposure there. Take the 39 by 30. Roll this out to the end of February. That was a buck. Hang on a second. What the fudge? 30 by 39 for 90 cents. I'm doing it on this account. It shows $1. Same expiration. Yeah. All right. Well, let's see if I can get a generous offer here. So let's go with buck on this one. Filled for $1. Well, that rolls way better. And this one has 0 JD exposure. Okay. This one has 0, 0, 0. This one has shares. So 39 by 30. Quick roll out to the 28th for $1. That's a big difference in fill. I'm kind of disappointed that one got filled for 90 cents. That one got filled for 99. All right, so let me update that in my tracker here. JD 36.82, and I'm going to take the lowest credit. So update, that is a 24-cent put, by the way. So update would be a roll out to 228 expiration, $39 sell call, $30 buy put. That buy put cost me 23 cents debit, so I can track that if I want to lower the cost basis. Collected 90 cents credit, and up to $1 credit, I'm just going to subtract the 90 cents. So break even is now 36.82 minus 90 cents, 35.92. Okay, so if I get it called away at 39, I make 308. I make 1540 on 3 accounts. 4620 would be my profit on JD. I'm good with that. So now update this. Rolled. So we've got the 228 expiration, 39 by 30 collar for 90 cents credit. So the break even is 35.92. Huzzah. Okay, so I'm in there. Schwab dividend, Schwab growth, fine for dollar cost averaging. Growth is killing it. Looking a little bit better. It's up a couple of bucks. It's nothing crazy. I put like a $1,000 position, or I bought 100 shares. So SCHD and G up about $1,800 on growth, and still flat, about $300 down on dividends. But I'm just going to dollar cost average into those. Those are okay. The advanced decline line, stocks above. So here's above the 50-day. I mean, you can see that the stocks have ripped pretty hard. I mean, a lot of stocks have ripped back above the 50-day moving average. The Nasdaq, same thing. A lot of stocks have ripped back above the 50-day moving average. Costco, I'm hoping that Costco has a pullback. High, low, lower, high, lower, low. I'd love to get some Costco in here. It is an expensive stock, so what I'll probably end up doing, rather than trading the options on this one, ratio spread is great if I can generate a high probability of income. But I'm not necessarily looking to take on 100 shares at $800 or $750. I would maybe consider it, but it's got to be at the right price. So let me set a chart alarm on the 200 moving average, and I'll keep an eye on this. So if we have another high, low, lower, high, lower, low, I'm curious. Earnings are coming out sooner than later. Earnings in March. So the first part of March, we have earnings. Walmart, own some shares. I've got it collared at 100 by 80. Nike, starting to bounce off the lows, which is nice. I have a 65 and 60 put. That's looking pretty good for full profit. Home Depot, Lowe's, MasterCard back up towards highs. Visa back up to fresh highs. Wow, that's a crazy rip on Visa. American Express also up to fresh highs. We have earnings on American Express on Friday. This is a hypothetical that we talked about yesterday in class. So, we were trading around 318. Do we get to 338 or get down to 298? I was looking for about a $20 move if I want to trade an earnings play on Amex. Johnson & Johnson, I've got to put at 140. Progressive, this one's out for less than 30 days now, but a 230 by 225. I would be okay getting a sign on Progressive. CB, this one's way out of the way, but this one should be fine for income. Palantir, I'm just going to wait for a pullback. This stock is ridiculous. Ratio spreads are looking pretty good. I'm out to April, May on ratio spreads. Carvana, I could care less. It's been a ridiculous runner. I wish I bought it. I bought some. I just didn't hang on to it for the 1,000% gain. I bought Carvana when we came back into this low here. So that was I look at it in hindsight, which doesn't help at all, but that's a nice little head and shoulders trade. We break out and there's your measure move. So, I mean, we blew through that measure move, but it was still a good trade coming into, once I bought in at lows, I took it back up to the highs. So that was, whatever. It was $20, $30 a share. It was okay, but obviously different to buy it at, $40 and take it up to $200. Shoulda, coulda, woulda, FOMO. Redfin, Zillow stand out of those. Sector-wise, we're still getting, so communication services, I've got a 111 trade on this one, looking pretty darn good for some income. That's $110. I did 2 contracts there. XLY is consumer discretionary. XLP for Staples. Staples like the worst performing sector this year so far. Energy still doing well. Got some cash secured puts on energy. Financials also doing well. I'm going to wait though. I mean, if we have high, low, lower, high, lower, low, let's say something like this on financials, if we come back to the 200 moving average, I will add more sector exposure, right? This is a pretty decent bar count. We are now 300 bars or so away from the 200 moving average. Okay. Well, if we don't make this like blow off move or we stretch higher, I'm not looking to call the top. I'm just saying if and when we have a pullback into the 200, it's a lot more attractive for me to be adding some exposure to it. So I will wait for hopefully something a little bit more favorable price wise. XLV is healthcare, coming in off the lows. Is healthcare going to get ripped this year by RFK? I have no idea. If healthcare is in this vicinity at 125 or so, I'll probably add some semblance of exposure there, but nothing yet. Industrials, industrials, basic materials, energy doing pretty well. They're like the big swinging sectors right now. XLB, basic materials, smashed back down to December, has come back in a nice way. Another one that I'm not sure where it wants to go. If this was a reversion to kind of catch up for that downfall, we're right back to kind of equilibrium. So is it upside or downside from here? I don't know. If we're downside, there's really strong support in the 70s. If it's upside, then we're talking maybe fresh highs up to $100 on materials. I could being the operative word, maybe look at some puts. I don't know if the IV is high enough though, since we've been going higher the last week or so. XLB, let's take a look at the IV. 42. I think I looked at this one yesterday. 82.95 XLB. Option strikes are going to be hit and miss. The options chain is not that great. We're going out basically month, and then we skip to like the next quarter. So I don't love that. If it went out to March, I mean, I'm getting 30 cents on a $8,000 risk. No thanks. Do I like materials that much? I'm not sure if materials are going to benefit from, AI infrastructure. I would think that they could, but let me check the sector again. And we looked at this a little bit yesterday. So this would be basic materials. Come on. All right. So LIN is the biggest weight. Sherwin-Williams, Ecolab. So this is one that I would be watching individually. I might just look at the stock right now. Newmont Corp, that's gold. So I'll look at this. This is copper and gold. Freeport-McMoRan is copper and gold. LIN, I don't even know what they do. I've never heard of that stock before, which is kind of sad considering it's 20% of the materials sector. LIN. Okay, I mean, for a utilities or basic materials, 33 price to earnings is pretty high, and it's also showing overvalued. Well, there you go. So, okay, let's go to Freeport-McMoRan. That's FCX. So this was actually a little bit better for me. I don't know if the premiums are going to be decent enough, but we're right back in the middle of all this garbage. So if I could own this stock down around $24, I'd be totally fine with that. So let's look at like a $28 to $24 ownership price, maybe something like a ratio spread 36.2. We've got earnings coming out tomorrow. Interesting. Well, one way that I could do it would be I could put on a bull put spread for right now if earnings are positive. I mean, we've had our fair go of earnings, but more positive than negative. Let's see. Would I be willing to own some shares? Let me take a look at this one fundamentally. FCX. Are we good on time, by the way? I didn't realize I've been going for an hour and a half, but I'm giving back since considering you just watch me, open and close trades for 5 minutes. But if I'll wrap up here in another few minutes. I don't think I have anything on the calendar. I've got a meeting in the next hour, so I'm good. Okay. Um, I like, yeah. I mean, I might just buy this freaking stock, man. Um, so we got a 29 price to earnings. Loving that discounted cash flow model. And against the peers, peer average 24.9. Yeah, I don't mind this play. Now, the smart way to get into a stock like this would be to just do something where it's like, if I want to own it at $28 or less, then I just put on the trades to own it at $28 or less. That could be puts. That could be one way to do it. But I could start this process now. Um, I mean, this has some solid technicals. Go to the higher time frame for a second. I mean, so the nice thing is all-time highs wise, we could get up to, let's say, $60. If I started establishing positions now, or at least some option trades around it, I could generate some income in here. I could take on some ownership in here. If it goes to the upside, either income. Boy, oh boy, oh boy. It's like, is copper going to rip this much? Copper and gold, but it's not trading spot price. I mean, we're new all-time highs on gold, or we're getting back up there. If gold's bid, like FCX may not benefit from that. But do they have a dividend? 1.49. All right, let me see what I can do here. So FCX, we've got earnings tomorrow. Let's go to Friday. I could take a really simple trade here. If I do a bull call spread, um, it's win or lose, right? If I'm right, I'll make 25 cents. If I go one strike higher, we're expecting about $1.50 move. I'd rather, yeah. I'm just going to try to see if, oh man, these options are terrible. Let's go to March or April. April, I said I want to own it around like 28. These are all disgusting. So if I want to say I would own it at 31 by 30, that's the good and the bad. Fudge, man. I could do, let me see if I've got a level here that I like. FCX. I mean, it's only looking for like a dollar move. That's the issue that I have. Now, um, I do see a nice liquidity level around $41, which would be begging for a higher move on earnings. That would be out near term. Let's see. All right, I'd take this back to Friday. So if I buy the 39 by 39.50, or I buy the 38 by 39, I pay 57 to make 43. All I need price to do is stay basically above where it is. That trade, like, that's not awful. That trade's not terrible, actually. If I can get filled at 30 cents. If I can't get filled at 30 cents, I don't want to take this trade. So if I can make, I probably won't get filled at, yeah, that's fudge. Never mind. I was going to say, if I could only pay 30 cents to make 20 cents with a, you know, in the money bull call spread, that would be fair. But now it's showing 40 cents, which means I'm only making 10 cents. So that's garbage. So I could do this one for every $27 I'm risking, I'm making 23. Price has to stay basically where it is. So as long as FCX doesn't miss on earnings, which earnings is going to be when? Today, or I'm sorry, tomorrow morning. Tomorrow morning. Okay, tomorrow morning. Now it's up to 30 cents. My strike price that I'm interested in is 41. I'd like to see if I can pay less for this trade. That means price has to go up 25 cents. I like the head start. I kind of like this trade right here. All right. Let's see. Are we missing something? That $41 level seems to be the play. I don't know. I'm going to hold off. It's going to be, I'll just make a hypothetical. I'm not going to freaking force a trade here. But I do want to keep an eye on FCX. Overall, I will say this. I'm just going to set a chart alarm. If we come down to, let's say, $30, I'm interested in owning some shares. Pretty simple. But I will exercise some restraint and patience and wait. So let me set a chart alarm here around $28. And at the money trades are a lot better premium. You know, like example being, if I did a 39.50 by 39, you know, I get 22 cents credit. If it goes to the downside, I would be willing to own the shares, but I'm doing this out for only a couple of days. That's not worth it. If I went out farther, anyway, I'm not going to take an earnings trade on it. I think 41 gets hit. I'll just make a note here. $41 liquidity level. I'm just curious if it gets hit. But it's such a hit or miss on earnings. You never know. Ratio spread, no, the premiums are crap. If I went out to April's 85 days, if I looked at a ratio spread, I'd have to be willing to say I want to take like a 31 by 30. I mean, look at that. For a ratio spread, you're only getting like 10 cents premium. That's awful. So it's not worth it. Not worth it at all. I'll just buy the shares. Not now. Let's say like if it comes back to $30 or $29, I'll just buy shares. You know, or I can put in a cash secured put at the money, which at the money for let's say 30 days out would be about $1.50 to $1.60. Like that is way better credit. You know, if I do get assigned or don't get assigned, that's at least an income play if I don't get assigned. Okay. All right. A couple of things. Let's go back to currencies. I'll spend like, I mean, it's 11:53. Just give me a few more minutes here before I wrap up. So dollar index on the week pulling back a little bit. I was hoping to see that if the dollar is going to continue to pull back, and I'm not sure about this, but if we have a a big pocket that was filled, if this area on the dollar is going to set up for some type of head and shoulders trade, perhaps the dollar can correct. I still think the dollar maintains bid around this like 105.50 to 106. Okay. I think that is a support level on the dollar. So even if we have a decline in the dollar, I am still looking to get long or stay long. Look, the dollar long, if I'm correct in this trade, dollar long is not a good thing. As far as the overall equities market, dollar long is not a good thing, right? If this is long, this means that US 10-year is also higher. So I would like to see the dollar correct in some fashion so the US 10-year can go with it. And then we can discuss like, okay, if this starts to elevate again or the dollar starts to get stronger. But a weaker dollar for right now would be a little bit of a relief, which would be nice. But I'm still not bearish on the dollar. I'm just going to wait and see if I can buy the dollar somewhere in here and then resume the uptrend. Okay. And then fundamentally, that could be a very painful trade. If the dollar gets stronger, that could be very painful for the equities market. And that would be like the second wave of inflation field. That'd be a lot of pressure on equities if the yields are rising. So SPY is creeping up towards 607 and change. They're getting up there. 610. Okay, 610 could be a target by Friday. I put it SPX trading this morning that didn't get filled. I'm curious where it's at right now. Same thing as yesterday, just doesn't have enough. The IV is still super low too, so I'm just not getting the premiums that I want. This will probably not fill today. Fine. All right, let's go currencies. So dollar related currencies, Aussie dollar. I'm still long on some small positioning on Aussie dollar. If this pulls back into this breakout level around 6,400, I'm going to take some profit on that short-term trade. Trump definitely wants a weaker dollar. If Trump wants a higher equities market, we're going to have to see a weaker dollar and lower yields. It's pretty simple. I don't think there's any way that the indexes can go higher with the dollar getting stronger and the yields getting higher. That is a correlation I'd be shocked to see. Anything can happen, but it's highly unlikely that we would see so much pressure coming in, higher yields and higher inflation. And the market's like, we can still go up 10, 15, 20% a year. I don't think there's any freaking way that's going to happen. It's already been a pretty stretched bull market in the end of 2024 when it was essentially led by 10 stocks only. So I think Trump definitely wants a weaker dollar. Whether he gets it or not remains to be seen. It's like inflation readings with the Fed pausing. And right now, the Fed is looking to not touch anything rate-wise until June. There's a lot of data that's going to come in, job number-wise and inflation-wise over the next 4, 5, 6 months. Okay. All right. Anyway, Swiss pairs. I'm going to go Aussie Swiss real quick. Still liking my long, still holding my carry trades. CAD Swiss was looking good, but this seems to be still kind of range bound. So lots of range trading here on CAD Swiss. I still like buying the dips though. Buying the dips. Eventually I see this breaking out and going up. Might be a while. We might come back down and revisit flash crash lows, but I'm still buying. This is area 1 and area 2 that I'm still going to be accumulating some small positions on CAD Swiss. Euro Swiss looking better. Had a nice little bottom here on 92. We're back up to 94.50. I'm trying to hold off to this one for at least a 97 to 97.50, but ideally 2 spots of profit on my Euro Swiss longs would be here. So about 97 and 99 would be my 2 spots. Okay. I'm already in this trade with my FOREX account. If you wanted me to post this through Pulver alerts, I would be willing to do this. Buy and buy and buy, and then stack up some orders. I think we get to this pocket, and I think we get to this pocket. I think we have a chance to get up to 99. So if you're willing to take a little ride with me and dollar cost average, it'd be small, 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 but stack these up to maybe $1 to $5 per pip. And net position wise, like 95 to 99. If I could grab 400 pips on a $5 position, I'll make a couple grand. That might be I'll take that trade. So I'm already in I've got like 20 positions on Euro Swiss. I closed out it was like 27 positions on dollar Swiss when it hit 92. So that was a big winner for me. But Euro Swiss, I'm going to look to try to get this thing back up to 99, but not be greedy. That'd be good enough. That would be good enough for profit right there. But I'll throw that in I'll do that in the Pulver alerts. So look for some Euro Swiss positioning. I'll start stacking these in. Okay, Pound Swiss, I'm still long. I'm trying to get back to 119, 120 on that one. New Zealand Swiss, still measuring some symmetry. All the way back to 56 is fine. Looking for a 5-wave move. Dollar Swiss, I took profit. Euro Aussie, Euro CAD. Just, I don't know. Be careful, man. This is like you're trading V tops and V bottoms here. This is nuts. Pound CAD. Again, be careful. Maybe a topping pattern, but I'm not sure. Right? I'm not sure. I'm just staying out of it. These commodity pairs that are high volatility, like Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. Be careful. I'm just staying out of them. There's a lot of volatility, a lot of chop. Not my favorite. So I'm going to steer clear and just hang in there for some trades that I really like. It might be a dollar basket that I like. It might be the Japanese yen basket that I like eventually. And I'm just going to hold true on some of the Swiss pairs. Okay. All right. That being said, that was a nice little segment today. And happy to spend some time with everybody. So off we go. All right. I'll let you go for today. I'll see you tomorrow. Thanks. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.